अजी अब तो पेंट चेंज करा लो. Gee, I've been looking at this same color for last like 3 years. It looks so down market. Let's try to change it. How about this? No? This? No. This, this, this. This one is better, right? Hey folks, see Rachna Ranade here, and I welcome you all to another brand new IPO video which is on Indigo Paints. In the first part of the video, you might have understood that the lifespan of paints has definitely reduced. But is that my observation? No. You can also check out in the data that in 2010, the house repainting cycle was 7 to 8 years, and this has gone down to 4 to 5 years. So, is this the case with only paints, or are there any other products also whose lifespan has changed? There are many products. I'm sure you can go back to your childhood days where your mother used to gift you a very nice cool t-shirt, and then you used to use it only for parties for first 2 years. Then for next 2 years it could be only for some minor functions. For next 1 or 2 years it used to be only at home. For next 1 or 2 years then it used to get changed, transformed into your night suit, and then maybe one for the holy day, right, on the Rang Panchami is what we call in Marathi, and then like a pocha, and that is where the lifespan of that t-shirt used to end. But these days I can definitely visualize that if I buy a new shirt, after like 2 years I would say that, oh my god, I'm bored with this, let's change it. So let me know your experience also, how your lifespan of using different things has changed over the period of time. Before we move on, I would just like to tell you that don't be so shocked after looking at me today. I know I've never worn such jazzy shirts till date. I've always worn plain shirts, very formal type shirts. But then I thought it's a paint company IPO video, so it has to be a little bit different. Oh, by the way, this shirt has been gifted to me by YouTube, so a big shout out to YouTube. Thank you for giving this as a gift to me, and a big shout out to Ranveer Singh as well. I feel like Ranveer Singh after wearing this today. Well, if you want to increase the chances of you getting the allotment of any IPO, then you have to ensure that you have demat accounts in the name of almost all your family members. So if you want to open an account with India's leading discount broker, link is there in the description box. There is a construction going right next to my place, but I hope their construction ends quickly and the painting starts fast. Anyways, coming back to our discussion, Indigo Paints, as the name suggests, is in the paint manufacturing company, is the fifth largest company in the Indian paint industry. It is the fastest growing amongst its top 5 peers as well. Let's understand who their peers are and when were they founded. Asian Paints, Berger Paints, Kansai Nerolac, Asco Nobel. These are the top four. Fifth one is Indigo. But when were they founded? Asian Paints was founded in 1942. A love story. Okay, 1942. Berger Paints in 1923. Kansai Nerolac in 1920. And Axo Nobel, I guess, in 1954. And believe it or not, this company has been founded in 2000 and still it is in the top 5. But then in such a short span of just 20 years, we have to understand, have they used some different strategy to be in the top 5 or not? So when I was doing some research, I found some management fundas which said three P's of success. But it's me, so I have to do something different. So I think there are 4 P's of success of Indigo Paints. Well, P's for paints also, but anyways, okay. The very first P is product. What did they do differently in their product? So the company has differentiated products like metallic emulsions. You can see here they give a metallic finish to walls. Second, they have tile coat emulsions, which is for roof tiles. They also have a floor coat emulsion for driveway. So they were like the pioneers in introducing these differentiated products. So number one, good products, differentiated products, ticked off. Second one is how they place their product. So they initially started by strengthening their foothold in tier 3, tier 4 cities, and as and how they started getting good foothold there, then they came to tier 1 and tier 2 cities and tried to increase their base. Third one is promotion. Now for promotion, especially in tier 1, tier 2 cities, if they want their product to be more visible, they need a good face to promote their brand. And who other than Captain Cool, Mr. Mahendra Singh Dhoni, was their brand ambassador, who actually gave a new level for their promotions. And these are the top 3 P's, as I mentioned. But the fourth P I feel is very important. The fourth P stands for Pune. Their office is in Pune, and hashtag Pune Tithe Kai Une. Let's quickly understand the value chain. Believe it or not, there are more than 200 raw materials required to manufacture paint. From here, some companies will give to another company for contract manufacturing, where it will be like a work in progress, and then it will be passed on to the paint companies. Possibility number two, the paint company itself will take the raw material and then they will do the entire work in progress finished goods all by themselves. Once the paint is ready, they'll either give it directly to the customers, they'll sell off to the customers, or they will sell it through the dealers or distributors to the retail customers or to the institutional customers. Well, this is about the value chain, but what about the industry? If you see very carefully, revenue and volume both are growing at a pretty decent CAGR. In this bar diagram, you can also see that the decorative paints are growing at a much higher CAGR as compared to the industrial paints. Currently, this company, Indigo Paints, is into decorative paints, which is used for painting houses, but industrial paints is used for painting machineries or cars. Just a quick question for you. Do you have any idea which is the leader in industrial paints? The entire Indian paint market is mainly dominated by the decorative paint market, which amounts to almost 74% of the market share. So, if I talk about all the players in this industry, you can understand that Asian Paints has almost 42% share, Berger Paints, Kansai Nerolac being other top 2 and 3, Indigo Paints has that very small, only 2%, and others, which is like the unorganized sector, that amounts to 33% of the share. Well, if I talk about the comparison of its peers based on dealers or distributors, you can easily understand that the CAGR at which dealers are growing is pretty high for Asian Paints and Kansai Nerolac. For Indigo Paints, the dealers are growing at 10.4% CAGR. Third point I feel is very important, which is about the tinting machines CAGR. You can clearly see that Indigo Paints is way above as compared to its peers in the CAGR of tinting machines, where its CAGR is 51.2%. But wait, anyway, the overall dealers for Indigo is less. That is the reason why CAGR might be pretty high. But if I talk about the tinting machine to the dealers ratio, Asian Paints, Berger Paints, Kansai Nerolac all are above 0.60, whereas Indigo Paints is just 0.38. I'm sure some people might be like, what is this tinting paint? What is a tinting machine? Sorry. So, just for you to understand, that's how a tinting machine looks like. Why tinting machine is important, let us understand. If you have ever painted your house, you might have seen so many shade cards wherein you can see hundreds of shades. Do you really feel that every paint shop will have hundreds of dabbas of all these shades? No. What these people do, they'll get this tinting machine from the company. So, for example, Indigo will give this tinting machine to the dealer. He is given majorly white color dabba, okay, white color paint, and in that he has all these other colors. So for example, a shade of pink is required, so the white color can will be inserted there. Then let us say 2 3 drops of red and whatever, my painting is very horrible, but 2 3 drops of whatever color will be inserted there, and voila, then the shade of pink will be ready. So please understand, more and more tinting machines will enable the dealer to sell more and more shades of a specific color. So that is the reason why having more tinting machine to dealer ratio is important. And what the company is going to do is, whatever IPO proceeds the company is going to get, out of that 500 million rupees is going to be used for the purchase of tinting machines. Well, balance is like they're also going to repay the borrowing out of the IPO proceeds, and also they are going to fund the capital expenditure for the proposed expansion plans. Well, let's quickly understand about the history background of the company. As I already mentioned, it was registered in Pune in 2000. It started its manufacturing plants at Jharkhand and later then shifted to Jodhpur in 2001. Their products mainly include water-based paints in their portfolio since 2007. One very interesting point is that in 2010, the company was present only in 11 states, and by 2020, it is present in 27 states out of 28 states, and in 7 union territories out of 8 union territories. The promoters of the company, as on the date of IPO, are Hemant Jalan, Anita Jalan, Parag Jalan, Kamla Prasad Jalan, and Halogen Chemicals Private Limited. Well, if you see here about the product list and the revenue shares, major products include emulsions, primers, da 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 da. You can read them. The highest revenue generating product for their company, or I can say the revenue share. Highest revenue share is from emulsions, and the lowest revenue share comes from cement, paints, and putty. IPO opens on 20th Jan, closes on 22nd Jan. The IPO price is 1488 to 1490. It's going to get listed on BSE as well as NSE on 2nd of February 2021. The minimum application amount is 14,900 and the maximum amount will be 1,93,700 for retail individual investors. It's a mix of OFS and fresh issue, where OFS amount, offer for sale amount, is 870 crores and fresh issue is around 300 crores. The details of people who are going to sell off their shares during the OFS is going to be SCI Investments, Heyman Jalan, and Sequoia, this company. Let's come to financials now. Let's just quickly check out few important ratios. Their ROCE and ROE is pretty good at 31% and 24% respectively. ROCE is definitely in line with peers if I'm comparing 2020 figures. The next one is operating profit margin. It is at 12% in 2020, but the EBITDA margins is at 15%, which is a little bit lower than Asian Paints and Berger Paints. Now, if I move on to balance sheet, there's nothing much special about that, so I'm not going to cover balance sheet as such. But if I go to P&L statement, let's check few points wherein the revenue from operations is at 6,247 millions. The CAGR at which it has grown is 25%, which is very high as compared to Asian Paints and Berger Paints. Even the restated profit before tax exceptional items, it is at 674 millions, and restated profit for the year is 478 millions. Now, for those who are comparatively newbies, you might get confused with the word restated profit for the period. Why restated? Let me be very clear with you. If you are not really interested to know the technicalities, next 1 minute is not for you. But if you want to learn more, you want to learn a little bit extra, if you want to gain that extra edge, you need to understand what is this restated profit for the year. Understand that all the companies have to present their financials as per accounting standards. It's like law for accounting, okay, accounting standards. But then what happened lately, India changed its presentation style from accounting standards to Ind AS. So just for you to understand what is Ind AS, it is the way in which the financials are presented, way in which balance sheet P&L is to be presented. Okay. Now this presentation was made mandatory to companies in a phased manner. Okay, all the big companies were asked to follow it from 2016, few from 2017, and this company has started implementing Ind AS from 1st of April 2018, and this is given in note number 38 in their red herring prospectus. Now, what it mentions in Ind AS, what it mentions that if you have changed from AS to Ind AS, you have to apply it from the current year. The previous years, which are given, like you saw, 2018, 19 and 20. For the previous years, you need not mention the restated figures as per the new rule, which is Ind AS. Exemption is given for previous years. Okay. But if the company is going to come up with an IPO, they have to restate the figures for the previous years as well. Okay. So in simple words, you can visualize it something like this, that if a new law comes up, then new law has to be made applicable for the current year also, and it will have to be made applicable for previous years also. This is applicable when a company comes up with an IPO. So that is why that word restated can be seen for majority of the companies. Just for your fun, if you want to check, the same word will come in Burger King IPOs P&L as well, Mrs. Bector's, and so many more IPOs which came up recently. Well, if you also want to know more about this Ind AS thing, if you have gotten a little bit of interest here, please do check out our video on Jubilant Foodworks, wherein I've explained very clearly how Ind AS impacted the accounting for rent, depreciation, and interest. Moving on to the grand finale, which is valuations. So if I talk about the two methods, PE and PB valuation method, first let's talk about the PE valuation method. For that, the diluted EPS for FY20 is 10.49 and the diluted EPS for H1 FY21 is 5.97, roughly 6. With this, the the PE ratio comes to 142 based on FY20 earnings, and based on FY21 projected earnings, it is still at 124. Where is the industry average? Industry average is at 100. So entire industry claims a PE ratio average at 100, and this company is coming up with a valuation which is much, much, much higher than this. So if you ask me from the PE ratio perspective, is it expensive? Answer is yes. If you talk about the PB valuations now, the book value for FY20 is 43. If I talk about H1 FY21, still it is 49. But the PB ratio now, price to book value ratio, comes up to 30.28 based on H1 FY21. Now, if I check out the P to BV ratio for Asian Paints which and Berger Paints, which are like the leaders. For Asian Paints, it is 23. For Berger Paints, it is 26. And this company is claiming a PB of 30.28. So if you ask me whether it is PE or PB, both are pretty much expensive. Well, to conclude, are the financials good? Yes. Is the growth good? Yes. Are the valuations good? Pretty expensive. But then the big question, am I going to apply or not? For that, you have to come live on YouTube on 22nd of January at 12 noon, wherein you will understand my decision. Till then, take care, Jai Hind, and bye-bye.